We're going back. QT has ended officially December 1st, but I looked at the October Fed's balance sheet. It was rising the entire month of October. So the balance sheet is rising, and it's going to rise even faster. It hasn't even begun, because if you think about what's going to happen in the next recession, we're going to have deficits that are going to reach between $5 and $6 trillion because of the automatic stabilizers that kick in. So we're going to have the Fed monetizing trillions of dollars in government debt because no one else is going to buy it. And their balance sheet is going to go back to 9 trillion and then keep rising from there. So that's unfortunately where we are as a society, Anthony. In 1913, the government gave this authority to the Federal Reserve for stable prices, and now it's full employment, so it's stable prices, full employment. But where is the mandate that we can never have a recession? I mean, part of a capitalist economy is the cathartic process of recessions, and part of a capitalist economy mandates that asset prices sometimes fall. They don't always go up in a very linear trajectory. They fall. And sometimes people get laid off because private corporations have overhired and they need to downsize. That's all part of the necessary and mandatory parts of a healthy economy, a healthy capitalist system, which is what I think we still have. I don't think Ma'am Dammy has been elected yet, but in the biggest city in the country. But we're heading in that direction where we're just we're eschewing capitalism, and I think that's going to be official in the New York City area soon. But it certainly has it's de facto a process in fiscal and monetary policy where we don't allow markets to function any longer. That's the purview of the Federal Reserve, just to make sure that we never have a recession and we never have a bear market. And the reason is, to be honest with you, you should know this by now, the Fed is in business to make sure banks never fail. And their assets are mostly loans made to either, consumers, in auto loans, student loans, commercial loans, to corporations, and real estate loans. And when those loans go bad, the banks fold. And the leverage in the system has never been greater. If you look at the total non-financial debt as a percentage of the economy, as of the last reported quarter from the Z.1, we are the most over-leveraged economy we have ever seen. And on top of that, you have the massive bubbles of stocks and the massive bubbles of real estate. If you look at the home price to income ratio, homeowner affordability is at a record low, home price to income ratio at a record high. And if you look at the stock market, total market cap of equities to GDP has never been higher. If you look at risk premiums being negative, and if you look at cyclical PE ratios, if you look at price to sales, if you look at every metric, we are in 3 gigantic, massive bubbles. Now, the fact that I've said this for a while, and these bubbles have popped in the past, and here's my charge. Here's the charter that I have. I'm going to participate in bull markets and capitalize by protecting and profiting against bear markets. So the fact that the bubble has popped before, that's a fact. And the fact that it is growing to a gargantuan record size now is a fact. It's not my opinion. It's a fact.